To a lot of the market out there today, let me just say, ew, holy cow, was that a lot of red. A good thing I had my short hedges in place, some of them performing very well, and really watching those long-term positions. Tesla, NVDA, having quite a day today. We're going to look through the charts on Tesla and NVIDIA, but we'll also take a look at the indices too. Talk just a little bit about how we performed today, what we're setting up for next week in the markets. But then I'll do another video this weekend talking about a little bit more detail about what I see coming up. So let's take a look at the technicals. Here's the hourly chart for NVIDIA. We finally tested resistance one more time and then sold off, found support. The technicals still holding out, so I can't wait to do some updates and some tweaking. Price target of 105. We got to it once again. We were within 95 cents of hitting the price target of $100. I think it's important to say that we didn't get there yet. So I know 95 cents is pretty close. It's within about 1% of where it's at right now. But for this one, I think that's a pretty key number there. And we didn't quite get to it. So it is possible that we do sell off some more for NVIDIA. I would like to see two-digit NVIDIA. Honestly, it's something that I'm hoping to see because for me, I do like to buy more NVIDIA shares. I'd rather do it at a much more discounted rate. September, historically not good for the market, so maybe we see a temporary bottom there. Wait until you see the Qs and where that one stalled out. I think that one's actually really interesting for us. So for NVIDIA, finding support right around this 101.84 line that we have here. As soon as this candle closed above it on the hourly chart, headed back up and started looking for the ceiling, and then you might be able to see these two resistance lines that are in here, a 1618 and a 618 level. So they can be very solid for resistance, close below them. So now we might end up having to try to find the floor on Monday. We're going to have to find out. But we most definitely found that ceiling so far and got rejected. And having this big old sell right here with decent volume, maybe we leg down just a little bit more and we start to see the two-digit price tags come out on that. And if we do, that price target's hit. And I do have a third price target down here at $94 per share. And there's a lot to fight through to get down there. So that would be significant selling pressure that we'd see to get that. And I think that we might be able to see some turnaround there, but we'll see what the market looks like between now and the election. I still think it's going to be a wild time. So let's go over to Tesla. And look at this. Look at that ugly pepper that we have on this. And this is the daily chart. So we got resistance held up for us today. And man, oh man, did we get rejected off of that one. The RSI, as a matter of fact, was doing quite well leading up to today. So we actually had big volume move. Thought maybe a continuation, but today's numbers plus today's market ended up not being very strong and shoved Tesla right back down. Now the RSI closed under 50 on a daily basis. So decent amount of pain there. In the post-market, we are actually, let me see, we're down just a little bit, about 70 cents from where we were at before. So about 0.3% in the post-market. And so we'll check it out. We are sitting right back down at support. So just keep an eye on these technicals. Let me actually give you a better view here so you can get something to screenshot just in case you haven't done it before, just so that you can see what I'm seeing. So we hit this price target a while ago. We made this one yesterday, tagged it again today. As a matter of fact, today's high, we almost got there. We got within 40 cents, 233.60. I think that we actually hit 234, maybe even a little bit higher in the pre-market hours. But we definitely didn't hit it throughout the day. So high price 233.60. I said we had to close above 234 to see 242. And we just, so far we didn't get it. We got that opening and just kept on falling, found the floor back down here at about 210. And you'll notice that's my price target 1. And if you watch my earlier videos, you know that it was there. You know it's an important level. The 200 days creeping right through here, just north of $200. Matter of fact, it's 202.74, so almost 203. My price target 2 sitting at that round number of $200 for that psychological support value. And then if we fall down through there, there's actually a stop by 191, but I have my price target 3 at 187. So we're going to have to see if we get a little bit more chop coming out of this market because we definitely got it today. I was a little surprised at just how negatively it went, but I think some of it was non-farm payrolls that some of the numbers that we were seeing were reflected in part-time work and at the expense of full-time jobs. And I think that explains a lot of it there. So even though the unemployment rate was at 4.2%, it wasn't necessarily, I guess it was overshadowed by non-farm payrolls would be the way to say that. Taking a look at Bitcoin, I don't know why I keep on getting that session disconnected view. I have technicals on this as well, but what I want to show you is the 53,349, and we found buying pressure here before, but so far we're just not getting that today. So if we don't see those long wicks coming off of that, if we don't see that buying pressure down here, we could keep on falling. Here's what the technicals look like, and I'll zoom in so you can really see, and you check that out. Once again, holy cow, right at the bottom of the support area that I have drawn on here. So falling down through that, so we hit price target 1, price target 2 is now met, and now it's price target 3. If we fall down through this support, we could most definitely see that happening, and that's a pretty far fall for Bitcoin to tumble down that much. And if risk assets are really going to suffer, well, that would be a place to look. All right, let's go to TMF, and then we'll go to the indices. I think that'd be a good order today. So TMF cashed out yesterday at nearly 40% profit on my call option. Didn't want the coin flip today, although I did get back in with another option when I saw some of the technicals on the 10-year Treasury yield number and also the 20-year Treasury. And I was like, well, this is peaking pretty hard right now. As a matter of fact, we even have decent volume today to talk about. Now, mind you, intraday is really important when we take a look at that. And I did adjust this trend line just a little bit because it really lines up well with the peak of this one and also what we have back in here. So we're getting much better touches with that. And you can see we got rejected pretty hard off of that one. So the call option that I took today is actually a hedge for up through October, just in case we get more weakness out of that. It was up 50% at one point, and it was hard not to pull the trigger to take that one because that was juicy, but I do think that it's possible that we activate some of these higher price targets. So I'm holding on to next week, maybe even the week after. Just through September would actually be nice to see what we get for that. So it is possible that we continue to see that climb. Now, that volume support that I was talking about, yeah, we got big green candle, but look at that high wick that's on it. So the bulls were like, let's do this. And the bears were like, no, and shoved it right back down. Stupid bears. I'm kidding, guys. I love you all. I'll play the market in both directions. This is just one that I happen to have a call on. Let me actually go down to the 15-minute chart. You can see it even better. There we go. And look at the volumes that we have on here. Where we have the biggest volume spike is when we came up and actually touched the top of the trend line. And this is another reason why I moved that trend line up, because the market responded at that price value between $63 and $64 per share. And so since it responded there, we got rejection coming off of that one, and then we had sell off through there. I don't think the bullishness is done, but I do think that it was time for it to rest for a little while. I do want to see it back up above 62.12. I was hoping to have it close up there. Didn't close up there yet, so we'll see what happens for us for next week on that one. So TMF, I think that it's still very, very good to watch out for the time being. No financial advice here, just my thoughts that I'm sharing with all you guys. SPY, take a look at this. We actually sold down to about where things left off, going all the way back to June. And we had a little tiny gap in there. I don't know if you guys can see that. Let me zoom in so you can really see that little tiny gap that we have in the post market. We're actually kind of creeping down to the bottom of those candles. And the Qs is actually a little bit more interesting. But look at that big red ugly candle that we have on here. And this is why having a position in SPXU like I did really does help out, because it really helps for the downside that you would have on that one. And today being down, how much were we down? 1.68% from the previous day. As a matter of fact, we even had a nice setup that these are about the same height, and that's fairly on purpose. That tends to happen. So where do we have to go from here? Well, we're down below the 50 EMA and SMA. We could come back up. We could test those again and keep on falling. We're going to have to watch for it. And from here, I mean, there's not a lot of previous peaks for us to land on. Let's just put the technicals back up here. And you can see I actually had my support for this one down at more like almost 539. We didn't quite get there, and maybe that's why we retraced a little bit. But we did bottom out on this thing at 539.44. And the line that I have on here, there's a 538.22. This one's at 538.50. So how far were we off of that? Not too bad. About within $1 or so of that support area. Didn't quite get there yet. So this is pretty much a free movement area. There is a Fibonacci value that's in there to watch out for at 541.54. So maybe we see a little bit creeping back up there. Watch for a rejection. My price target down here at 538 is what I'm watching out for. So that could happen. I have another one down here at 530 and another one at 523. So I think those are all going to be critical values for us to watch. So if we look intraday on SPY, you can see, ooh, look at that. Look at that in the post market, everyone. we were short of that support area, and now we're creeping up on that support area. So we'll see if in the after hours we actually land on and find support at the top of that support area. That would be incredible. And it does look, this look that we have right now, it suggests that we could see a continuation down to the next support area by the time Monday rolls around. We're going to have to see. Going over to the Qs, look at this. I want to show you just these lines. The red line is where we close. The blue line is in the post at the after hours, the post market. And look back here to this previous peak that we have. Look where we're sitting. We closed right at where we were at on the 21st of March of this year. And in the after hours, we're creeping down to the tops of the other surrounding candles that we have on that. So that is going to be partial evidence that we have for that being a critical value to end at. And so let me see the technicals on here. And you can see what I have built up for this for an area of support. And again, there's that same look that we got for SPY. Just ripped right back down through resistance, 2 rejections, and then a further sell, a big ugly day today. I don't know if you can see that on your screen or not. My price target 1 to 454. We definitely hit that one. 443 is a really important value for us because that is the 200-day on the Qs. So be on the lookout for that. It could happen to us, especially with this selling pressure we have, and it's September, and we have recessionary fears. We have the Fed meeting coming up. We also have the election coming up. And, all the other normal risks are out there as well, like the geopolitical risks, for example. So these could be wild times, but I think that they lead to incredible opportunity. And then check out the trend line that we have down here below this. And mind you, price target 3 is even down below the 200-day. Now, mind you, the 200-day is a major bounce area. We could see that happen if we get rejected off the 200-day. Then that switches to like a bearish sentiment from where we're at right now. Above the 200-day is bullish. And if we see the 50 come down and cross it and give that death cross, we know that we're in bad shape. But we're going to know that before the death cross ever happens. That'll be a lagging indicator for us. All right, let's wrap things up with IWM. And look at this. So today, where were we? Today, we actually got rejected off of the resistance area that I have drawn on here, off of this trend line that I have up here as well. And we sold down to this lower trend line that I have. So right down through support. And now we're finding that trend line. And just below that, it looks like I can actually extend that up a little bit. Let me see if I can find the middle of that one for you. As a matter of fact, let me go out to the daily chart on this. We were looking at the 1-hour chart. And this is kind of messy. I apologize. There we go. But that's why I zoom in so that you guys can see a little bit cleaner for what we have to deal with. And then we can pick through the details as they come along. So expand out that way. There we go. That looks better. That looks cleaner. And in the after hours here, you can see us riding along this trend line. Didn't quite make it down to support yet. So we could see a little bit more pain, a little bit more pressure coming to that one. So I said, going back a month or two now, I'd have to go back and see the date on that. I said for IWM that we would likely, before seeing all-time highs come out in IWM, that we would likely see some pain coming, perhaps significant pain coming. But I do believe the IWM is going to have that moment, that next moment for significant opportunity. And I think it's going to be even bigger than the last one that we saw. So keeping my eyes on IWM. It is possible that we keep on heading back down south for now. And let me look at the monthly chart real quick. I'll give you an idea of about where I think this thing could go. I think like mid 170s, if we see that sort of pain or worse, mid 170s for IWM or worse, this thing, this is why I'm not showing you the charts. I put this up here before. It's just a mess, though. I'm looking at this green line that I have right here for this massive bull channel that I was talking about in my previous videos. But mid 170s, if we touch that, that could be a partial signal for a giddy up sign, I'm thinking, for me. You guys got to do your own research and due diligence. If we fall down through that, mind you, the only time that we fell down through that in the past, holy cow, going all the way back to 2009. So in the last 15 years, the only time we made it below that green trend line was the pandemic. So pandemic hit March of 2020, and then we ripped up all the way from $95-ish and we peaked out at $246. So $150 climb from where we're at. So that's the full 90. So that's 100%, and then another like 66% on top of it. So that's a big old climb from there. And so like I said, for IWM, I think that we could have, I think for all the indices, we have incredible opportunity coming for us, that if you're not in leveraged positions, that maybe you should be getting hungry watching these things drop, watching stocks get cheaper. And honestly, the bounce can happen anytime. For me, I like to watch things a bit cheaper. I think they've been expensive for a while. You can even listen to things Warren Buffett has said where nothing is cheap. And so he made a big move to cash, and look what's happening with the markets. And, maybe he'll actually find those deals that are out there. Maybe we will too. And we'll have to bring those here to this channel. If you guys want to see my buys and sells, if you want to hear more of my commentary, if you want to talk to me and my community members, there's a link down in the description for the Patreon. Go ahead and click on that, sign up, head on over to the Discord, and check all that out. And if you guys want to learn to do technical analysis like I do and empower your trading through technical analysis, you can do so by using the link down in the description for the Stockmo Academy course, where it teaches the bread recipe trading strategy, which is it's incredible. And a lot of people are finding that in just a single trade, they can cover the entire cost of the course, which is even easier thanks to the code word DOCTOR, DOCTOR. That will give you a massive discount on that course. And then there's also a Discord that goes along with a learning community of people that are there to support each other. Stockmo's there. I'm over there. Stop in sometimes, say hello, answer people's questions. And it teaches you how to set up the bread recipe. It's very clean, very simple, very few indicators, but with a high chance of success that also goes along with it too. I use it myself. Stockmo uses it. And the people who join that course also use it, and they also share the victories that they have. So guys, thank you for watching. Enjoy your weekend. I am Dr. Stock, Doctor of Education. Remember, my friends, that learning is earning, and we'll see you in the next video.